Congress keeps beating the markets. What if you could too? This is Inside ETFs, and we're talking about congressional stock tracking funds. Members of Congress aren't just passing laws, they're outperforming Wall Street. And critics say lawmakers are trading on information the public doesn't have. But now there's a way to follow the money. Republican and Democratic ETFs let you mirror the stock trades made in Congress, giving you a shot at riding the same wave that they do. But is this a smart strategy or just a bet that the system stays broken? Let's ask Dan Weiskopf, Senior Portfolio Manager at Tidal Financial Group. So Dan, these ETFs are essentially betting on lawmakers' trading instincts. Has tracking Congress actually paid off so far?
This year, yes, extremely. Listen, both funds are up about 16 and a half, which is handily beating the S&P 500.
So we've got one ETF following Republicans, another following Democrats. Are there notable differences in the type of stocks each party is leaning into?
They're very different, actually. Like GOP, I speak in terms of tickers, sorry, that's the Republican one, seems to be tilting more towards, ironically, Bitcoin, with about a 5% allocation. And then also JP Morgan, which is an interesting comparison between the two allocations. And they're more value oriented, the Republican side historically. And then on the Democrat side, they're growth oriented with handy exposure in Nance in the way of NVIDIA and Amazon and Microsoft, those names. Is this a coincidence? Maybe a bit. But this is the process and this is the way they're investing.
And are these trends that have stayed consistent, or have they changed up under the current administration?
Oh, well, certainly on the digital asset side, it's changed on the Republican side. But by the way, I would also say that it's broadening out such exposure. But the growth tilt by Democrats has been consistent, led by Nancy Pelosi, obviously. And then on the Republican side, there's more of a tilt towards value in the way of financial services and basic industries for a long period of time.
Let's look at the legislation though, and the Stock Act gives lawmakers up to 90 days to close trades. Is a reporting lag too long for investors to capitalize on the info?
We don't think so. Absolutely not. I think what's a bigger issue for me is, frankly, the penalty is only $200. I mean, that's $200 if they're investing $1 million across 50 names or one. I mean, it's really just kind of ridiculous, I think.
Well, critics are pointing out that these funds are pricier than broad-based ETFs. Is this just a novelty for politically minded traders, especially when the info is based on a social media account?
I don't think so at all. What's the price of alpha is the question. And these funds, if you say GOP is a value tilt, has handily beat the value ETFs. And in the growth side, Nance has handily beat the growth allocation. And the interesting part is that most of the members of Congress, are basically 55 to 63 years old. So we often get the question of, who's going to use these funds? And we think they're appropriate for most investors, particularly those who are aligned with the same age as our honorable members of Congress.
So if these ETFs do well, they could shine a harsh light on congressional trading. Could that pressure lawmakers to ban stock trading and make these funds obsolete?
Listen, at the end of the day, if somebody is responsible for healthcare legislation, they really shouldn't be investing in healthcare stocks. This is all very logical, and the technology exists today. Banning may be the best outcome. That's fine, but why shouldn't they be regulated in the same way that the financial services industry is regulated?
So finally, Dan, these are growing in popularity, but could that create a feedback loop where lawmakers' trades move markets simply because investors are watching them closely?
There's no question that it occurs regularly. When Nancy Pelosi makes an investment or a repeated investment, it's highly tracked. and we see immediately after the disclosure a bump up in price after her trades particularly, but others as well. And then, what we'll end up seeing, I think, is the herd mentality piling into the stocks that members of Congress are investing, which may be fine because the ETFs exist in other services, right? But it's just not right in general that they're investing with better information than other people are.
That was Dan Weiskopf from Tidal Financial Group. Don't forget, you can watch more videos on Reuters.com.